What's up everybody, Tom here with another video. In today's video, we'll be discussing the latest stock market news affecting the markets around the world right now. We'll also be taking a look together at our technical analysis using the top-down approach on the S&P 500, Nasdaq, Bitcoin, gold, and Tesla to try to figure out what's going on right now in the stock markets. We saw some jitters in the stock market yesterday with people on Wall Street being concerned about a few things that we're seeing going on right now. Let's take a look at that and more. Stay tuned. Well guys, what have we got going on here? A sea of red for the first time in a little while since the US election. This is basically what we expected to see, which is a bit of a pullback based on some concerns we'll be talking about later throughout this video. But for now, really, it wasn't that anything was particularly safe. And this is off the back of some pretty big news as well from Pfizer, where they came out and they actually had 95% effectiveness rate. But by now, we know there's also some problems with that vaccine to do with actually storage and moving it around. When we take a look at the broader market, this is where things get interesting. Fairly stable, flat kind of day, followed by increased selling near the close. And what does that mean? Well, it means, of course, Wall Street were the ones definitely trading and definitely getting out. This marks day 2 of the days where we've seen Wall Street really get involved with selling near the close. And remember, we should be paying attention to this. The smaller the moves are and the bigger the sell-offs into the end are, so the sell-offs at the end always happening, means that they're really leaving us, the retail herd, holding the stocks and they're selling them off with the idea, of course, of picking them up later at a cheaper price. When we look at the sectors, no real sector was safe yesterday, but it was interesting to see that energy, the biggest performer of the last 2 weeks, was down the most, makes some sense. And of course, utilities continues its slide, which is more of a rotation out of that sector as it heated up way too much, way too quickly, and deserves some pullbacks. Every other sector, not too notable. I'm still surprised that XLY is doing so well. I think that it really does rely on stimulus longer term. That's consumer discretionary, and we haven't seen the stimulus get through just yet. I still think that will be a question around Thanksgiving next week, if not, of course, into Christmas. It's going to be very important that Wall Street get some answers to those questions. So in the broader news of what we're hearing about, Wall Street dives as shutdown worries overshadow the vaccine hopes. Look, we can read these Reuters, we can read these Bloomberg articles, Yahoo, whatever you check every day. You'll always see this is the kind of excuse that they bring up. But the reality is the market moved up very, very quickly, and it is probably looking at taking a bit of a kind of consolidation before the next move up. Let's face it, we were at, 11,000 on the Nasdaq only, 2 weeks ago, and then we hit 12,200, 12,400 very, very quickly. Similar on things like the Dow, similar on things like the S&P. It's been a wild couple of weeks of bullish momentum, and we do deserve to reset a whole bunch of indicators. So I would expect even further potential pullbacks here before the next move up. And we've discussed this as a community together quite some time. If we're talking about the way that this market has been recovering though, things like stock price breadth and other types of important factors are really, really important. And you'll notice here again, if we highlight this point, stock price breadth is really important to healthy recoveries. So we did not have a healthy period between July and of course September. But that has now changed, and we've started to see all of the sectors moving up in some form of uniform reality, whereas it used to be just technology. Remember, when all stocks are moving up, that's the sign of a healthy market. So when a corrective phase occurs, we should be very interested in that market. But when the market's going up and it's only one sector, similar to June and July, that is very much not normal, and you need to be paying attention. And that's why we've discussed that quite a lot on this channel over the last couple of months together. So let's take a look at the broader market. CBOE put call ratios as of Wednesday were a 1.75 SPX rating, so getting up there a little bit more. Total put call ratio is 0.73, so it's declined partially. And if we have a look around the broader markets, we're still seeing a decent amount of calls being opened by the retail community, and that does lead to the potential of further corrective phases. Remember, Wall Street really likes pushing the market down when everyone either loses hope or becomes incredibly bullish. That's the concept that they've maintained really now for quite a few years, and it can sometimes go for a long time with these bullish movements that don't necessarily make that much sense fundamentally or in reality either. Here we got the dollar index, and the dollar index or US dollar is very much at the critical point. It almost hit that 92.20 zone, bounced off it a little bit, and now it's coming back to the 20 exponential on the 4-hour chart. We know that it's found resistance here once before, so will it find resistance again? This will be the 1, this will then be the 2, and then of course it becomes that self-fulfilling prophecy if it goes down and comes back again. We're certainly very interested as day traders and scalpers in the 3. So let's see how this one plays out. We've talked this dollar index quite a lot in this channel. 92 critical point. After 92, we're really looking at a move down to 89. There's just that much free space in this particular pair when you look at things like the weekly charts, which we'll do right now. Look at this. Last time it got through, all the way back down to the 89 previous resistance. So I think it's a very critical point, a rare point in dollar index. You don't always get these amazing areas where in the next couple of weeks we're going to get a very clear direction to potentially months worth of trade for dollar index. I think that's exciting for us as a community. Volatility index is spiking right now. We're up 5% at a 23.8. I'm not sure really what to make too much of the volatility index at this point. I don't think we've got a clear kind of path technically here, other than we're still above the 20, and that means that anything can happen. When we get under the 20, normal market conditions, or at least normal as normal can be. Right now, anything can happen, and we're just hoping that if we want the market to come down, we do see the market start to spike here in terms of fear. So the VIX coming off that 21.8, kind of close to where it previously bounced up, and it is right now up about 5% at the time of recording of this video. Well, let's talk about the flavor of the week at the moment, and that's been Bitcoin. Bitcoin for the last couple of weeks has been probably the strongest asset and one of the best technical trades. I've got up here a trend line that I put in yesterday's thumbnail, and this trend line has kind of been predicting the previous peaks. So we've got peaks here each single time, and we hit that peak yesterday for Bitcoin, and you can see that it's respected it and it's pulling back. Now, another interesting thing, and it didn't happen really so much on this second one, but last time we hit this peak, we pulled back to a 50 exponential moving average. So if that was to occur, which I think is probably overdue now for Bitcoin, considering this very heavy long move, we'd be going back here to previous kind of peaks at around 16,500, and we'd hit a 50 exponential moving average. That would be a good, interesting area for us to be in if we were trading this pair. I think that Bitcoin is starting to get to the point now where obviously if it reaches close to 20,000, it's going to find a heavy selling due to the nature of that level and what happened last time during its economic boom, I guess from 17 to 18. But the 50 exponential could be a good reload zone or opportunity moving forward. And I think it would make a lot of sense from multiple levels here on Bitcoin. Another thing to start looking at and discussing is going to be side or altcoins. So one of those, of course, Ethereum, a very popular coin and has been one that's generally moved near the late cycle of Bitcoin moving. So if we have a look at what happened with Bitcoin last time during its last kind of final phase here, September into December, Bitcoin actually peaked at the 1st of December. Now, it then steadily declined after that point. But if we take a look at Ethereum over the same period, let's go out here to a monthly. Look at what happened with Ethereum. Ethereum actually peaked here 1st of January. So the move from October into November into December was sustained throughout this coin. And we're seeing a similar kind of thing going on right now. For many people that come to our webinars, I talked about this level a little while ago, and that was that the 350 kind of level was previous resistance, and that when it broke through here, we expected it to come down, test it, and then have potentially further movement up. And you can see that the market is truly moving very aggressively here on Ethereum right now. So let's just talk about Ethereum from this level right now, and that is that it's got this 440 zone. We saw a bullish close above that, little bit of indecision candle, and another bullish close coming in. This is starting to look like it could be quite explosive. And again, this area, what happened last time? Well, last time it got through this area, it exploded out and quickly got to 800. We've got a very nice pattern formation underneath. We've got a lot of consolidation followed by wicks, which means there's a huge amount of purchasing around this 350 point. And we also know we've got the 20 exponential on the weekly that's been acting as a little bit of support once here and once here throughout this bullish process. So as it follows, we could very easily be looking at that as kind of our dynamic stop loss as we're moving through to the 600 and 800. I do believe that 800 will act as some kind of resistance if it does start to pop, but altcoins right now are probably going to be your flavor of choice if you're looking at Bitcoin and looking at cryptocurrencies. Traditionally, after Bitcoin has its big move, when it starts to drop, people go to the next area, and the next area is generally the alternate coins such as Ethereum. So what about Tesla? Well, Tesla broke out, and as expected, when it got past this 462 level on at the smaller time frames and closed above, let's just have a quick look at that on 1 hour. It was aggressive and there was some nice follow through action there. We ended up closing the 1 hour at a 475 and it didn't pull back. It just kept on going all the way up to almost the 500. Now we know this is traded by a lot of retail community. So what's going to happen? It's going to stop just before the 500 and most likely sell off at that point. Let's go back to the 4 hour here and just talk about this level. So if Tesla now pulls back, let's say it was to pull back to this 462, do we think there's going to be buyers there? I think the answer to all of us is most likely there will be, because this was clearly a great point of resistance. We had resistance, 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 broke and closed through, completely confirmed now, and a pullback to this zone should meet with smaller time frame moving averages as well, and we do expect another move up, test of 500, and potentially even a break. We know that Tesla is an aggressive share when it gets going because of the nature of the mentality here, and it had a very good day yesterday, bucking the trend of what the broader market was doing. We ended up 10.2% at 486. So very, very nice move from Tesla, and definitely one to have back on your charts and start to put in alerts for things like 462 and possibly even pullbacks on reoccurring moving averages on the smaller time frame during what could be a little bit of a bullish trend here on this share. All right, so on to the broader indices. Let's take a look at the Nasdaq right now. Well, the Nasdaq was continuously holding this 200 moving average, and we can see that it bounced off it multiple times and then failed to make a new high. And this is really one of the signs where you know that you're in trouble. Now, is this moving average a great buying area? Yes, it was. It was, multiple times touched, multiple times supported, and it actually gave you a lot of intraday trading activity. But when we failed to make a new peak here, that is an early warning sign every single time whenever you're looking at these that you are in trouble with that moving average. And that's because we touched it once, twice, 3 times, found support each time, and then was failing to make a new high on this second point. So when it came down here, okay, that's fine. But then it went up, made a new high, and then had to come down again. That shows a lack of momentum. So for Nasdaq right now, we're certainly finding some weakness coming in across the board here. And we're trading at the 11,880 right now. When we're talking about where does it go next, well, we know that 11,600 is a massive buy zone area for this particular indice. And that's because it had so much resistance on it, so much support again, and the market is certainly trying to come back down to possibly a level like this. What we might see though is we may see the 200 moving average on the 4 hour possibly be supported, but most likely it would now start to drop off, flow over, and pull back possibly to the 11.6 zone. And that'll make sense when we look at the S&P 500 in just a few moments. So for now, it looks like there's some weakness here in the Nasdaq, and if it continues to come through, we could be seeing an 11.6 relatively soon. Hopefully we do, as I think that's a pretty interesting reload zone for many traders out there. US 500, let's take a look now at the S&P 500. So the S&P 500 started rolling over a little bit. At the time of recording of this video, we're at 35.65 here. Now we've talked about this level quite some time here, 35.20. We're now only about 40 points off this, but we've got a 20 exponential moving average here on the daily, which it hasn't touched for some time. Very important area, which we know has been respected a lot during these bullish aggressive moves. We have a pullback to that point, pullback to previous support. It kind of makes some sense for it to find some buying pressure. If we go to a 4 hour, we can see that at this point in time, we're at a 4-hour 50 exponential. I don't know if that's that significant. I think there's it kind of in the middle of nowhere land right now in terms of this pair, but certainly it is there. And if it is to pull back, let's just quickly get a Fibonacci out and just talk about the move since the US election. So since the US election, the move up has been pretty aggressive. We can see that. We also can see that it came down to the 38.2 fib, didn't quite touch it, and then of course moved up. And then it's found resistance at the same point and moved over. Now this becomes a very key point for the bulls and the bears soon. If we get to this 35.20, we have support, support, previous resistance, and if it gets through there, what are we starting to look at on the larger time frames? A little double top. All of a sudden, there could be some really decent selling here, and this could be the next major corrective kind of pullback that we see into maybe even a 61.8 fib of this entire move. If we do see that and it comes back to this level around the 3400, I would expect quite a lot of buying there. But these are the two significant points. This is going to be a significant area, just like it was previously last week. And then we're going to have that 3400 significant area as well, if the market is able to close below this. Worthwhile having both alerts on your charts and thinking about it from that perspective. So we'll go quickly over gold here. I've just got gold on a 1 hour chart, and I just wanted to show you that it really has no clear direction. We were talking about that a little bit yesterday. Basically, it's trading at 1870. It got through that 1880. It tried its hardest to hold above. If we go to a 4 hour, we'll see why. 4 hour, there was wicks, there was body closes, it was consolidating. It's failed that zone. So now for gold, if we continue to see dollar strength and we see gold weakness, 1850, well worth having on your charts. You can see over here, support, support, buying pressure, support, buying pressure. But if it gets through that area and it closes below, you're going to get some very nice reload zones on gold, potentially downwards of 1800 or even 1750. This is where the 200 simple moving average is here on the daily. And this is a very important particular moving average. You can see it almost held it last time during that initial kind of flash crash. And this time, this will be the zone that I expect some buying to come in from gold. But yeah, worthwhile having 1900 as a set alert, previous peaks above here, and of course 1850. Those two $50 gaps are going to be the key levels to watch out for on gold. So that's it from us. We hope you enjoyed this video, and if you did, of course, remember to subscribe and hit that alert button. Just remember that it is all about confirmation in these markets, and there's always critical areas that are reached, and those areas are the ones that you want to set alerts for. And even if you're not looking at them this week, you can come back and check them out at a later point in time. Good luck to everyone out there, and of course, make as much money as humanly possible. See you in the next video, guys. Bye for now.